at the Q3 earnings for Meta, formerly known as Facebook. Be patient. That's the word of Mark Zuckerberg on a conference call. Meta misses its earnings and revenue. The stock plummeted about 20%. It is not looking any better on the financial side of Meta. However, on the daily user, subscriptions, and the active user, family users, it is looking brighter and brighter. You have more users, more daily users. Over 2 billion users on Facebook alone. About 1.9 billion users on Instagram. Meta remains the largest platform to date. Meta Reality Lab division lost about 3.7 billion in Q3 alone, while overall it's about 9.7 billion. Meta does not have big issue in earnings, even though the advertisement business has actually reduced significantly, which is the largest portion of the earnings where the revenue comes from. We have talked about the privacy on Apple, how it has negatively impacted all social media, not just Meta, the likes of Snapchat and the host of other, Pinterest. But for Meta, the main thing is spending on the metaverse. Don't miss it. The metaverse remains the destination, and Mark Zuckerberg is focused on it and is more confident about it. Let's have a look at some details of the earnings, and also we have a look at some of the metaverse, how it is shaping up. We'll also have a look at the detail. Look, on the Meta, on the finances, it is issue of spending, the expenditure. They are spending more. So we'll have a look at the liability, we'll have a look at the cash flow, and other ways that they have been spending on the metaverse project. Let's have a look at the Q3 earnings details. The actual revenue is 27.7 billion, while the estimate by analysts is 27.43 billion, while the EPS is $1.64, but the analyst expectation is $1.89. So it's a near miss, but however, the stock plummeted because it met out, and with the whole advertisement not being driven like it used to be, it is now more of AI. There are a lot of changes going on Instagram. The videos are becoming real. Real is not monetized already. So they're losing revenue from one place to the other. Not that they're losing entirely, because it is like changing your revenue model, from text print to video. But the video aspect, which is real, it's not yet monetized. So all these factors affecting it. It is not an issue of subscribers or users or daily active users. No, it is more of changing the revenue model. However, let's have a look at details line by line on the earning details, and we'll also have a look at the technical chart for price action. Let's have a look.
Here is our Facebook page. I want us to go through the Facebook then, before we check the investor relation. However, I also think that everyone has Facebook, so there's no need to spend time on Facebook. We all know what Facebook is all about, which is now Meta. So let's just move on to the report itself. Okay, here is the report for the Meta report third quarter 2022 result. As you can see here, our community continues to grow, and I am pleased with the strong engagement we are seeing, driven by progress on our discovery engine and product like Reels, said Mark Zuckerberg, Meta founder and CEO. While we face near-term challenges on revenue, the fundamentals are there for a return to stronger revenue growth. We are approaching 2023 with a focus on prioritization and efficiency that will help us navigate current environment and emerge an even stronger company. Third quarter 2022 financial highlight in millions, except percentage per share amount. So here, this is the revenue, which is at 27.714 for third quarter 2022 compared to 2021. The change is four, that's negative 4%. Cost and expenses, as you can see, 22,050 compared to 18,587, which is an increment of 19%. That's for that third quarter. Income from operation, as you can see, operating margin is 20% compared to 2021, which is 36%. Net income, 4,395 here, 9 million. So which means you can see the difference, and you can see why the stock plummeted as well. Minus 52%. So let's move down to third quarter 2022 operation and other financial highlight. This is the main thing here. Family daily active people, that is DAP. DAP was 2.93 billion on average for September 2022, an increase of 4% year over year. Family monthly active people, MAP, was 3.71 billion as of September 30th, an increment of 4% year over year. You see why you should still be looking at Meta. It's still the largest platform and it's still growing. People are still using it. Facebook daily active user. This is the key. 1.98 billion on average of for September 2022, an increase of 3% year over year. You see, Facebook monthly active user MAU were 2.96 billion as of September 30th, which is 2022, an increment of 2% year over year. Now, revenue was 27.71 billion, a decrease of 4% year over year, an increase of 2% year over year on a constant currency basis. Had foreign exchange rate remained with the third quarter of 2021, revenue will have been, this is it's common to all. It's estimate rate will not remain the same. It's not as if it has to be pegged for you. Cost and expenses. This is another key point. Cost and expenses. Total cost and expenses were 22.05 billion, an increase of 19% year over year. This include an impairment loss of 413 million for a certain operating lease as part of our ongoing work to align our office's facility footprint with our anticipated operating needs. Capital expenditure, including principal payment on finance leases, were 9.52 billion for the third quarter of 2022. As you can see, Facebook, the issue really spending. This capital expenditure and cost and expenses, they're so high. Facebook need to get them down. Share repurchases, we repurchased 6.55 billion of our Class A common stock in the third quarter of 2022. As of September 30th, 2022, we had 17.78 billion available and authorized for repurchases. Cash and cash equivalent and marketable security. Cash equivalent and marketable security were 41.78 billion as of September 2022. Long-term debt and head count. The head count is 87 million 304. Okay, 87,000. Sorry, 87,304 of as of September 30th, 2022, an increment of 28% year over year. The head count. Now, there's a news yesterday or so that Facebook is laying about 11% of the staff, so which is very significant, and the stock actually responded positively on that news. So that figure will not be the same again. CFO outlook commentary. We expect fourth quarter 2022 total revenue to be in the range of 30 to 32.5 billion. Our guidance assumes foreign currency will be an approximately 7% headwind to year-over-year total revenue growth in the fourth quarter and based on current exchange rates. To provide some context on the approach we are taking towards setting our 2023 budget, we are making significant changes across the board to operate more efficiently. We are holding some teams flat in terms of headcount, shrinking other investing headcount growth only in our highest priorities. As a result, we expect headcount at the end of 2023 will be approximately in line with third quarter of 2022 levels. We have increased scrutiny on all areas of operating expenses. However, these moves follow a substantial investment cycle, so they will take time to play out in terms of our overall expense trajectory. Some steps, like the ongoing rationalization of our office footprint, will lead to increment costs in near term. This should set up well for future years when we expect to return to a higher rate of revenue growth. So obviously they have set out a plan, and they're looking for to return to the higher revenue growth. We expect 2022 total expenses to be in the range of 85 to 87 billion. Let's move on to, we expect slight majority of our 2023 expense dollar growth to be driven by operating expenses, with the remaining growth coming from cost of revenue. We expect the percentage growth rate of 2023 operating expenses to decelerate meaningfully as we curtail non-headcount related expense growth and keep 2023 headcount roughly flat with the current levels. Conversely, our growth in cost of revenue is expected to accelerate, driven by infrastructure-related expense and, to a lesser extent, Reality Labs hardware hardware cost, driven by the launch of our next generation of our consumer Quest headset later next year. That's the reality metaverse or whatever they call it that they put on their head, which Facebook has created or made. Reality lab expense are included in our total expense guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significant year over year. Beyond 2023, we expect to pace Reality Lab investment such that we can achieve our goal of growing overall company operating income in the long run. We expect 2022 capital expenditure, including the principal payment of finance leases, to be in the range of 32 to 33 billion, updated from our prior range of 30 to 34 billion. For 2023, we expect capital expenditure to be in the range of 34 to 39 billion, driven by our investment in data center, server, and network infrastructure. An increase in AI capacity is driven substantially all our capital expenditure growth in 2023. Absent any charges to US tax law, we expect our fourth quarter 2022 and our full year 2023 tax rate to be similar to third quarter 2022 rate. In addition, we as previously noted, we continue to monitor development regarding the availability of transatlantic data transfer and their potential impact on our European operations. Let's move on to the technical chart for price action. You can download this. There's an attachment here which you can download to actually drill down further for the report. Here is a technical chart, and we are looking at weekly chart. Let's start with this. The market capitalization, market cap for Meta Facebook has reduced drastically. Drastically. As you can see, 269.05 billion. The shares in float is 2257.9 million. Shares outstanding is 265 1.5 million. The EPS rating is 60. The EPS growth rate is 19, while cash flow is $17.27. Return on equity is 31%. The EPS over the years, Facebook has always been positive, until recently when the metaverse project started, and it's taking a lot. Here we have, as a close of 9th November 2022, the market closed at $101.47. Facebook is trading 52 weeks high is 353.83, and 52 weeks low is $88.09. But then let's have a look at the owners. Here we have 45% funds, one bank owned 1%. Let's have a look at checklist. On the checklist, Benjamin Grant is a 10 out of 13. Warren Buffett is 15 out of 16. I'm not surprised. And Peter Lynch is 7 out of 8. Technical, we can see that Facebook is below 10 weeks moving average and 40 weeks moving average. Here is the 10 weeks moving average and 40 weeks moving average. 10 weeks. So this is a weekly chart. So the 2 weeks ago, which is the two previous week, it was a big gap down. I mean, it was an engulfing, bearish engulfing, but then it was just throughout the week. But now we have, as of yesterday or this week, rather, we've had a bullish move. Not significant, but at least. But we are still trading below 10 weeks moving average. And you can see it is actually trending down. So let me just draw this as you can see. See? In fact, we can do lower high, lower low, lower high, lower low, lower high, lower low, lower high, and it broke this what's it called, support. So then let's have a look at it on a daily chart. On a daily chart, as you can see, you don't need a soothsayer to tell you that Facebook has been trending down since beginning of the year. It is crystal clear, but we are actually trading below 15-day and 50-day moving average on a daily chart. Guys, I've learned one thing about Facebook, which is a metal. Do not think stock or stock price cannot go any lower. I have added so much to my position. Facebook is now the second largest position in my portfolio because I average down. Yeah, dollar cost averaging, and I still keep doing that. I got some stocks earlier last week just to try and average down. But guys, be careful. Do not go in all at once and do your valuation. We're still in a bear market, and this bear market is turning out to be a longer one than we may expect. We don't know yet whether we're still going to fall into recession. Is a different thing, but the Fed still keep increasing the interest rate, and it's still likely to increase by December. So guys, please be careful. Do not just jump on metal stock without doing your proper valuation.
You have seen the details of the earnings. It is more of the cash flow, the expenditure, not the revenue itself. Of course, the revenue is also declining compared to few years back, but it is more of the spending, and you're seeing the cash flow as well. Look, this might just be the right time for you. It's an avenue. Metal has never been this cheap since I've been investing. But then, do your valuation, look at it, be sure you have confidence in the metaverse. If you do have that confidence in the metaverse, this is just might be the opportunity for you to acquire metaverse, stock, that you can keep for a long haul. This might be your right time. Thank you for watching this channel. Thank you for subscribing. We continue to produce content that will support your investment journey. Please call again.